Hey traders, this is Blake Morrow with Traders Summit, and with me for the very first time, I have Mr. Bruce Fraser, he's a blogger, blogs about his power charting programs with Wyckoff strategy, but he's also on StockChartsTV. Bruce, it's so nice to have you here one-on-one. I've been a fan not only of you after hearing you talk with other traders, Dale Pinkert being interviewed, talking about the markets, but it's more of your, not just you, it's your strategy as well and how you attack the markets. So tell us a little bit about yourself and what you do in the markets.
Well, this whole thing goes back to when I was in graduate school, like about 40 years ago. So, but I would never admit that.
I'll cut that out. I'll have that cut out.
Yeah. So I was pursuing my MBA in finance, and my finance teacher said I had to go take this course, which he says it's controversial. You may not agree with any of it, but you got to go take it. And it was a graduate level technical analysis course taught by Dr. Hank Pruden. And I was, it was about all things technical analysis. And it was a whole new world for me. And I just absolutely fell in love with the material, the concepts, everything. And part of that class was the Wyckoff method, but it was so many other things too. And that's the reason you see sort of an eclectic mix of different approaches that I'll put into my analysis. But even though I'm trained as a classic finance guy, I'm really just an old school chartist.
Okay.
That's my world. And so then I started teaching graduate school for Dr. Pruden, who became my mentor, my dear friend. And I started teaching that course in 1987. And that just started a 30-year career of teaching the technical analysis, the Wyckoff method, and so on at Golden Gate University in San Francisco. And as far as I know, it became a whole program. And the entire technical analysis program, a person could get literally a certificate degree as part of their graduate studies in technical analysis, where they would take a whole series of classes.
That's pretty cool.
And so I created the curriculum on a number of the classes, taught them. We covered a lot of different ground, styles. We taught psychology. We taught, Hank taught just a brilliant course on Elliott Wave. But the thing we did for years and years, 27 years, we taught this. The period arc over 27 years was teaching the Wyckoff method as a graduate course.
So, well, first of all, I think that's really, really awesome. I think a lot of us that in our college studies would have loved to take some technical analysis course and the Wyckoff strategy or methodology, if you will, at that. So tell us a little bit about the Wyckoff methodology and why you were drawn to it so much.
Well, it's a very old school methodology that really goes back to the beginning of the 20th century when Richard D. Wyckoff was a young man. And he really asked all the right questions. And as he worked on Wall Street, he was started as a runner and then worked his way into really becoming one of the predominant writers and market speculators on Wall Street into the 20s and 30s. And he was a contemporary and a friend of Jesse Livermore. Jesse Livermore had his Midtown trading room, which he let nobody into. And Richard D. Wyckoff was able to go in there, and they met up with each other in Florida on vacation and things. But he studied all of these people of that era, and he said that there are the real rules of the game of trading. And the real rules of the game are vastly different from what the public thinks they are. And that literally the way Wall Street is set up is to separate people from their valuable money for worthless paper. That's an old saying, but there's kind of some truth to it. So Mr. Wyckoff, he basically later in his life, he was kind of ill, and he sat down and he wrote a correspondence course on the entire methodology he developed over his career. He was like the ultimate newsletter guru, where he wrote this newsletter and people subscribed, and his selections were so good that he basically had to shut the letter down because the Wall Street people would get their hands on it first, and then they would effectively front run the trades, and that's not what Mr. Wyckoff wanted. And it was a hugely popular newsletter, and so he was quite amazing guy, and he started a magazine in his day. He only had like a junior high education, but he was so self-taught, and he started a magazine in his day called the Magazine of Wall Street, which originally was called The Ticker. And his view was, if I start this magazine, which he knew nothing about publishing anything, and he started it, became hugely popular. And he said, well, if I start this magazine, I start writing about the concepts I think are important in trading and in market analysis, then I will learn it better. And so it became hugely successful and popular.
Wow,
so
that is really cool.
Amazing guy. And his method is really unique and unusual, and it's all about chart reading. It's about reading the bars. There's point and figure analysis involved and synthesizing those different elements. And he was very good at analyzing volume with the price bars also.
Okay, and it's, for those of us that understand the basic principles of Wyckoff, it is more of an accumulation or distribution, showing massive amounts of accumulation at a certain levels, but there, or distribution, if you will. But it is way more than that, isn't it?
It's very rich, and the thing is that you can so go down the rabbit hole and go deeper and deeper. He was very good at what he called tape reading, which in his day was reading the market bar by bar by bar.
It's actually reading a tape too.
Yeah, he was good at reading a tape. And of course, Jesse Livermore was not a chart guy. He was strictly a tape reader.
Yeah.
And so what Richard D. Wyckoff said is that you can see the basic elements of the smart money. He called them the composite operator, which he says you want to always be in unison with the composite operator, the very large interests that are informed and know what they're doing, and they're the ones that create the elements and the patterns of accumulation and distribution. And as a consequence of that, you can see the footprints of the very big operators on the street or in the industry by looking at the charts. You don't want to do it by reading headlines. You don't want to do it. You want to follow what they're doing, not what they're saying, because they are never going to tell you what their motives and objectives are. So
it's a lot of great points. Bruce, why don't you show us some of the charts that you brought for us to give us a better idea of what this is, especially those people that are kind of like, wow, this is the first time I've really heard about the Wyckoff strategy or methodology.
Sure. So you can see my screen here.
Yes, sir.
Okay. So he talked about accumulation, markup, distribution, markdown. This is the price cycle. And also, just as part of my background, I was a part-time teacher, but I was a full-time portfolio manager, and I was a principal in 2 advisory firms. We managed stock and bond portfolios for individuals and corporations, pension plans, et cetera. That was my vocation. Yeah. And my partners were Martin Pring and Joe Turner. So as a result, they were mentors to me also and dear friends. And they really helped me to understand the business cycle characteristics that coincide with the price cycles of stock trends. And they are related, they go together. And so and there's a sequence of events that occurs in the business cycle that also occurs in the price cycle. Now, this chart is a little fuzzy, but it's such a good chart. I can really sort of explain a lot quickly. This is a chart that my teaching partner, Roman Bogomazov, did in the 90s. And it's basically here's the accumulation. Now, this is obviously all truncated because trends can go on for a very long time, but you have the concepts. And so you can see here that the trend, the accumulation concludes with the initiation of an upward trend. This is what Wyckoffians care about. The accumulation process takes a long time because the composite operator types are basically supporting the market at a price as they systematically accumulate shares without putting the price up on themselves. It takes a long time. Think about a guy like Warren Buffett, how long it takes him to build a reasonably sized position in his portfolio.
Right.
And so this is where support comes from in the accumulation process. Eventually, what we call absorption occurs, and this absorption results in all the available stock being absorbed, accumulated by very strong hands, and that creates a shortage of supply, and it takes very little additional demand to start and initiate the uptrend. And the uptrends can go on for a long, long time. Then it concludes with a distribution, and the distribution has some of the same qualities as accumulation, but flipped over. But there's very different progression of events that occurs as distribution goes from its initiation to its conclusion and results in a markdown.
Well, I'd hate to freak anybody out here, Bruce, but gosh darn it, that looks just like the S&P right now in March of 2022. I don't want to freak anybody out, but that's what I see.
Well, it's so interesting that you bring that up. Well, let me show you. We do work with these schematics. Okay. We have a number of them. Here are two. If you go to my written blog, distribution definitions there on the bottom left corner, you can see it. It's a reference. You can go read about these schematics, and you could copy and paste them, print them, do whatever if you care to. But let me just, so I'm not going to get into it today, but notice the idea here of phases. And there are different phases that need to take place as you go from the beginning of distribution to its conclusion. And that's the case. These are just two variations on a similar theme. And so we, as Wyckoffians, really develop a keen eye to being able to see how we are progressing from phase A to B to C and then E into a downtrend. And also conversely to that is in accumulation, the same things occur in reverse. So this is part of the mastery process of becoming a Wyckoffian, is becoming very good at this. And I would argue that all good accumulations and all good distributions go through all of these phases to their conclusion. And there's a number of different ways they happen. This is not pattern recognition, it's behavioral recognition. We're looking at the behavioral characteristics. So let's just go here. And this is the, I think what you're seeing. Now, these charts are a little old here. So March 7th, I think, was the date of these charts. Here you can see the progression, and these are the different basically events that occur: preliminary supply, buying climax, automatic reaction, secondary test, and so on, sign of weakness, kind of beyond the scope of what we can talk about today. But I want to just show you, here are the schematics. Now notice this on the left, the NASDAQ kind of follows the distribution schematic number 2. And like I said, there's a bunch of them. But look at how you had a rally up to a lower high here. I call this a secondary test here. This is calling a last point of supply. I think that arguably there's a much bigger structure at work here in this area. But here are some key areas that you can see on the schematic. And then here, so I asked the question, is there another LPSY coming in, sort of like this one here, and another rally? This is as of March 7th. But we started to see trouble brewing actually in September, October, when we had this big break in the market, and then the market resumed its uptrend. So just keeping that in mind, that this was a break on volume with a lot of volatility in it, which showed the active distribution occurring by large interests. Here's the S&P 500. The S&P is actually stronger. You can see this last push up was what we term an upthrust or an upthrust after distribution with a test. And you can see that here in that schematic. And then look at the downward stride that developed after that. Yeah. Now, I was seeing in here some green shoots. And I've talked about this in my videos, but probably don't have time today to get into it, but we certainly can come back to it later on. But again, I'm asked the question, with these green shoots, were we going to get a swing trading rally? And also, you can see here, it's a little hard to see, but PSY equals LPSY. That's a very common relationship in distribution, as an attempt to rally up to that preliminary supply level on the last rally up, or one of the last rallies up. And so here's where we are today, as of Friday. So
yeah, I was going to say, this is getting more recent. This is where we're at, and we are developing that area which you were just suggesting.
Exactly. And these are old notes on here, but people might like to look at these, because it sort of goes through the thinking or the progression of observations during the structure. So now here's the bigger question, Blake, is that if this is an LPSY, and I put a question mark, I'm hoping it's more than that. I'm hoping that we can get a much bigger rally. But, we are always dealing in probabilities in trading. So, here we have not only resistance, because preliminary supply, the way we would explain this preliminary supply is, this is the first place that important supply came in with volume on a decline, and much bigger than the ones that preceded it in the uptrend. So this is a big sign that somebody important is selling stock. And also over here, by the time we get over to here in the NASDAQ, we can see the NASDAQ is starting to lag, which it hasn't done in a long, long time. So it's been leading really for 10 years, pretty much. And so now this is a little troublesome. But so we have rotation occurring maybe into the more blue chip type names that are populated in the S&P 500. And I use the term blue chip loosely, because over here, the NASDAQ 100 they are the true mega caps. They are the tail that wags the dog of the market.
Yeah.
But also keep in mind, and you can't see it here, I don't have it in here, but this is also the 200-day right here.
It sure
so
is.
It's rallied from underneath, and it's rallied up to the 200-day. So now we have two forms of resistance here. It's going to be very interesting to me to see how the market handles these two very important forms of resistance.
Well, Bruce, this today was, in my opinion, was a masterclass in just understanding some Wyckoff distribution schematics. And so the next time that we meet, I want to see some good setups of maybe some accumulation patterns that you're seeing and distribution patterns that you're seeing live in the market, because I really, again, this is a trading type of strategy and methodology that I personally have incorporated into my trading, especially in currencies. You see it really, really develop well in the currency market, because it's such a big market. So those big players, if you will, tend to be in there, and they tend to leave that footprint as well. So I love the Wyckoff strategy, and I'm glad that we got to introduce it to the traders over at the Trader Summit community. So if I'm a trader, I'm at home and I'm trying to follow you a little closer about what you do, how do I do that, Bruce?
Well, go look. I have just a number of blogs, written blogs over at StockCharts.com. and they're free. They're not behind a paywall. Just go to stockcharts.com and go to articles, and it's called the Wyckoff Power Charting blog. And you can see the archives there and go through and just look at them in order. I tried to write them sort of in the order of how I would teach a class. And there's a lot of case studies. So I think that's a very good place to go. And then also I do a weekly video at StockChartsTV that is available to anybody. And you can probably do a search on YouTube for that or for my name and get all of the videos. And there's just a bunch of them.
Awesome.
So,
then I'm looking forward to do more work with you. With you and I here on Trader Summit. So if you guys and gals are watching Bruce at home, make sure you give him a thumbs up if you're watching us on YouTube. And if you haven't subscribed to our channel, make sure you do so. And you can actually click below in Bruce's bio, and that'll navigate you over to some of his work as well. So Bruce, thanks for spending your time with us today. I really appreciate it. And I think this type of knowledge is great for the trading community.
Blake, I'm so excited to have been invited to be part of your community, and I've really enjoyed some of the times all the times I've been able to come and show these materials. But I look forward to doing more of it.
All right, Bruce, thanks for joining us today, and we're going to catch up with you real soon.
Thanks, everybody. See you next time.
Thanks. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.